Hi everybody, it's FIBO Group and you are watching to the Market Watch review. Asia-Pacific equity were generally lower than expected, with South Korea returning from vacation and Australia notable exceptions. Europe's Stoxx 600 fell for the third consecutive session. The U.S. equity futures are slightly mixed. All G10 currencies are weaker today. The Scandis and New Zealand dollars outperformed yesterday by 0.6%, while the Canadian dollar, the best performer, and the Swiss franc are down 0.2%. They are still in the bottom 10. The rising dollar and higher interest rates are dragging gold lower after it rose to nearly $50 over the past two sessions. April WTI traded at an 8-day peak above $78.00. The high last month was $80.80. Asian Pacific market. Japan reported fourth quarter sales and capex, as well as company profits and sales. These are not driving markets. However, Japanese profits fell 2.8% year-over-year from 18.3% in the third quarter. Tomorrow will be the first time that Japan's inflation hypothesis has been tested. Tokyo's February CPI is due. Dollar recovered from yesterday's three-day low near JPY 135.25 to settle at JPY 136.20 today. Yesterday's key reversal was achieved by the Australian dollar. It traded on both ends of Tuesday's range and then settled above its high. The Aussie is more likely to test support at $0.6700, as there has not been any follow-through buying. Market of Europe. France and Spain also reported higher February CPI figures than expected. The aggregate figure was therefore more solid than expected. The headline grew by 0.8%, marking the first increase in October and compensating the three-month decrease. The year-over-2018 pace was 8.5% compared to 8.6% in January. Separately, the Eurozone reported that January's unemployment was at 6.7%. Yesterday, the euro was stuck at $1.0690. It is now more attractive, and the bids of around $1.0620 were quickly absorbed by European turnover. Sterling spends more time below $1.20. Market of America. Market reveal preferences continue showing that it places more trust in the ISM and less in the PMI. The market was encouraged by the ISM services jump that occurred in January to consider the U.S. jobs data that had been published a few hours earlier. Yesterday's focus was not on ISM manufacturing index, which confirmed the PMI continued challenges, but on the prices paid component. From 44.5, it jumped to 51.3. The Bank of Canada is currently on hold due to the higher for longer rate outlooks in Europe and the U.S. It is unlikely that the Bank of Canada will raise rates next week. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.